Hello everyone, welcome back to How to Hack the Economy. We have spoken about the terrible economic impact of COVID-19, what countries are doing to prevent further economic downturn, and also about how some companies are seeing a once-in-a-lifetime opportunity. In every video, I spoke about the market going down and economic crisis ensuing, but there was a once-in-a-century event that happened recently. Let's take a look at it. Before I begin, I recommend you watch my video analyzing the policies of different countries like China, Italy, and the United States, so you can get the full context of the issue at hand. Let's start by looking at the after-effects of the bill enacted by the US. On March 24th, a week after the stimulus package in the US was announced, the Dow Jones saw an unprecedented growth of 11%. This had never been seen since the Great Depression, and that was 80 years ago. Now, in the same month, unemployment rose to 22 million ever since the first week of March. That too is a historic value, and to quote CNBC, the US has erased all jobs since the Great Recession in 2008. 36.5 million jobs were lost since the beginning of the year. That is a stunning 22% of the active workforce lost. Why did the Dow Jones have the best week since the Great Depression, while America lost all jobs it created since the Great Recession? There are two explanations, one relatively obvious and one that's slightly more nuanced. To start with the simple explanation, we have to understand that while the Dow Jones is often used as a barometer of stock market performance and in turn the general trend of the economy in the United States, it does not represent all of it. The Dow includes the most valuable companies listed in the United States, not the local diners or the arts and crafts store down the road. And it is those businesses that are the victims of this huge wave of unemployment. In uncertain times like this, people would rather hold on to their money than to go out on a splurging spree. Plus, it's important to remember that in the US, $1,200 is not nearly enough for maybe a month, especially for those who relied on their previous existent jobs for a steady income. That is why unemployment continued to grow. The reason the Dow rose is because of repeated investment by the Fed in the markets. $2.3 trillion to be precise. This to some extent increased the confidence level of investors in equities, which brought investment to one of the most famous and traded indices in the world, given its nature for security and lack of volatility. So this brought increased investment by those who could afford it, despite the steady and rather concerning increase in employment. More importantly, Jim Cramer from CNBC stated, "The 30 stocks on the Dow are the stocks that thrive when money is put in by the government, whether it's through the Treasury or the Federal Reserve. There are no nail shops, hair salons, or auto mechanics in the major indices. So while large businesses were thriving, smaller ones preferred to hold on to their money and laying off workers to reduce their cost, contributing to the contrast between the Dow Jones and the modern-day labor market." Now, on to the second explanation. During this time, many digital trading platforms like eToro and Robinhood came into the spotlight. These platforms offered something that was very recently introduced into the industry: a zero-commission online trading service. Typically, when people buy and sell stocks, they pay brokerages a percentage of what they spent buying the stocks. Now, people could just sell and buy stocks with no added cost, increasing the volume of trading in the market. This encouraged people who had lost their jobs to try and earn money on the stock markets, and they did not have to worry about losing money, since that very day, the government also announced that they would provide each underprivileged American with $1,200. That was also the day that they announced the Fed was going to be pumping $2.3 trillion into the economy, which gave the layman confidence in the recovery of the stock markets. What's more, in the same month, an announcement by Moderna, the pharma company, was released, which claimed that the company was beginning trials of a coronavirus vaccine, which could potentially cure the pandemic. This brought arguably the most powerful weapon back into the stock market: hope. People had hoped that the pandemic was going to end soon and wanted to grab a bite of the stock market before prices began to increase. So let's take a step back and summarize all these factors in a small example. Let's say someone just lost their job since their company was laying off workers to accommodate for losses experienced due to the pandemic. They read an article which talks about the major funding in trillions going to companies that need it. They also remember that they heard on the news a week prior that one of the largest pharma companies in the US was beginning trials for a promising vaccine. On top of that, they also discovered an app which allowed them to trade for free. This points to massive confidence in the market, and this person is aware of that. Unfortunately, since they were just fired, they don't want to take the risk and lose even more money through reckless investing. But then they also remember that the government will be sending $1,200 to every household, meaning that they can spend money on the markets with the assurance that even if they lose some money, they will have that relief package to bail them out. And if markets go their way, well, then they will have a new source of income. So we now know why the Dow had that sudden spike while the unemployment situation continued to worsen. And some may argue that the stimulus package was successful in the sense that it allowed markets to recover. But it's important to note that while markets did show recovery, markets are still as volatile as ever compared to pre-pandemic stages. This becomes even more important when we understand that this stimulus package was released with the intent to reduce unemployment. Every economy runs on their residents working and paying taxes to the government. This also encourages the circulation of money. If unemployment is still so high, stocks don't really matter, and the world will continue to be stuck in this downward economic spiral that was discussed in the first video. So simply put, the stimulus package was not effective. While markets grew more during an economic crisis than it did in the longest bull run in history, the citizens of the United States are more or less exactly where they were when this economic downturn started, with unemployment going through the roof. To solve this, the United States has been planning on releasing another stimulus package as of June 16th, worth $1 trillion, according to the Market Insider. These $1 trillion will go to the improvement of the general infrastructure of the country, which could result in economic growth as it provides people with jobs throughout the duration of this project, encouraging the circulation of money. This brings to light the true behavior of these politicians, using the situation to back their political campaign, especially applicable to the United States, seeing as the election is this year and Trump is pushing for re-election. Trump implied during the election in 2016 about a large boost to American infrastructure and has been pushing for a $2 trillion infrastructure stimulus for almost 4 years now. So while this may help the economy, this might just be another box for Trump to tick and another trophy for him to add to his campaign wall. It is important to remember, however, that money can do wonders for people when enough is pumped into the economy, and the intentions do not matter when the consequences of any action have been brought to light, for better or for worse.